What's up, what's up, my Mind Your Money business folks? It's me yet again with another video. Excuse the music that was playing earlier. Well, not earlier, but just now. Yeah, I just wanted to come on with the video. I'm off work today. Decided to take the day off, so I'm relaxing. But I found an article that I deem is important with a lot of good information within it. It talks about Goldman Sachs, how they're seeing the starting point for the year end rally of the S&P 500. So they're seeing the S&P going up starting next week. Because typically, and you can Google this, like November and December are good months to invest in the stock market. That's what history has shown. You know, they're normally good months to invest in. And these months have, you know, I'll say November has been a little iffy, but for the most part, I have gains in my portfolio. The S&P 500 is up year to date over 25%. My information technology stock is up, well, ETF is up over 26%. So yeah, it is true. So I wanted to get into this article and see what it's talking about, and yeah, let you guys in on the information. It says here, US stocks could start their year end rally as early as this week, a top Wall Street analyst suggested on Friday, as market breakout of their post-election malice and power toward what could be a record year for the S&P 500. Goldman Sachs analyst Scott Rubner, the bank's global markets managing director, who earlier this month pegged a year-end target for the S&P 500 of 6,300 points, says stocks are set for a solid holiday season bounce following a week in which the benchmark has gained around 1.3% to take its 2024 advance past 24%. That is true. Like the S&P 500, like I said, is over 25% right now. Oh, disclaimer, I am not a financial advisor. All information in these videos and on my channel are for entertainment purposes only and it reflects my opinion. So please contact a financial advisor before you invest any of your money in any of the stocks that I talk about on this channel and in my videos. So let's get back to the article. Okay, US equities have been in a consolidation phase all week, which is typical going back to 1928. Rubner said in a client note published Friday. Next week typically starts the year-end rally, including some of the best trading days of the year into Thanksgiving. That is so true. Like, the same thing happened last year. I remember December just blew up last year, and I had good gains last year in the month of December. Okay, Rubner said the year-end rally is an election year. In an election year, typically extends into early January, before typically fading right before inaugural day on January 20th. So one good month that was never mentioned as a good month to invest in the stock market is February. It will say November, December, January, March, April, and May, right? So I think the next 6 months, excluding February, are going to be great months into the stock market, because I see inaugural day, January 20th, is not going to be good, you know, because of who the president is and how a lot of people feel about the individual. President-elect Trump. Okay, Goldman Sachs data, which tracked the market's performance from election day to the end of the year, going back to 1928, notes 3.4% average gain for the S&P 500. Hey, history only repeats itself. This year, the benchmark has printed more than 50 all-time highs and added nearly $6 trillion in overall market value, and is on pace to deliver the best year-on-year advance in history. Wow. Stocks bull market trend is continuing. Wall Street analysts, many of whom are issuing new forecasts for 2025, are uniformly bullish on stocks heading into year-end, citing the combined impact of Federal Reserve interest rate cuts, a resilient domestic economy, and pro-growth policy proposals from President-elect Donald Trump's incoming administration. Mary Ann Bartos, chief investment strategist at Sanctuary Wealth, sees the gains lasting even longer. We are in a secular bull market, and we believe this bull trend has another 5 years, she said, adding that the current phase is similar to the period of 1995 to 2000 and possibly from 1925 to 1929. They're seeing trends, people. And the only way that you can participate in these trends, this bullish market, and making money is if you're investing. All right? Again, history only repeats itself. During the mid-1990s, which Bartels describes as the first advancement to the digital era, stocks rallied 20% for 5 years straight, while weathering outsized corrections tied to Asia's currency crisis and the collapse of the long-term capital management hedge fund. Wow. For 2025, we expect the S&P 500 to continue with a target range of 7,200 to 7,400 points. Right now it's at 6,000. This is what she argued, citing levels indicating a 24% gain from Friday's close on Wall Street. But we believe the longer term track is for the S&P 500 over the back end of the decade to reach 8,000 to 10,000 points. Wow. You know what that means? That's like in the next 5 years, you can gain over 100% total when you add, like, it's like 65, like if we can get up to 6,500, that's like, I think 10%. Then 7,000, it's like 20%. So every 1,000 is like 20%, I think. Don't quote me on that, but I'm trying to add this up real quick. So like, yeah, either way, you can make a lot of money if it gets up to 10,000 points. Right now we're at 6,000. So that means these companies that are within the S&P 500, S&P 500 consists of the 500 largest companies in the United States, like Microsoft, Apple, Amazon, Meta, Nvidia, so on and so forth. So that means these companies, they're expecting these companies to grow. Yeah. So either way, back to the article. We believe this is fundamentally driven by the productivity gains from AI and a strong U.S. economy aided by maintaining lower corporate taxes. That's Donald Trump, president-elect, right? Lower interest rates, Federal Reserve, and the ongoing stimulus from the Biden administration, pieces of legislation that allows companies to continue to post strong earnings growth. Yeah, as long as people have money, they will spend it. So it says here, collective third quarter profits for the S&P 500 are set to rise 8.8% from last year to $527.4 billion, and are forecast to add another 9.8% over the final 3 months of 2024. Wow. LSEG data also suggests earnings will rise 14.1% next year, and a recent Wells Fargo update forecasts the benchmark overall profits at $275 a share amid the potential for new corporate tax cuts and looser regulation from the Trump administration. Goldman Sachs, meanwhile, sees the U.S. economy growing 2.5% next year, an above trend forecast tied in part to a resilient labor market showing inflation pressures and robust consumer spending. That's it. But that's a lot of information, people. That is a lot. It says again, this is a trend that they've seen before. This growth for the next 5 years is similar to the dot-com era, 1995 to 2000, and a similar era of time from 1925 to 1929. Wow. So invest, people. Get into the stock market. Lower your debt to income ratio. Dollar cost average into the stock market. Budget. Create a plan. Do not budget anything you cannot afford to lose. I do see if things are going to grow the way that this article is saying, that means things are probably going to be, what's the word? There's going to be a lot of disruption in the stock market. There's going to be a lot of ups and downs, but a lot of gains. That's why you have to stick to whatever your plan is. Make sure that you're investing into good growth, blue chip stocks, and be in it for the long haul. And that's all you can do. All right, so that's all I'm going to say. That's all I have to say. I just wanted to get on and make a quick video, relax. Might take a walk down to the beach. And yeah, that's it, people. All right, you guys take care. Peace.